This is the market comment for Friday, December 15th by Ref Boyajian. I'm Cristina Marujos, and thank you for joining us here at xm.com. Central banks in Britain and the euro area diverged from their U.S. counterpart on Thursday, sidestepping any talk about rate cuts while reiterating the need to maintain higher rates for longer. The European Central Bank kept its main lending rates unchanged as expected, but President Christine Lagarde took markets by surprise with her hawkish tone. Although the European Central Bank lowered its forecasts for inflation this year and next, Lagarde warned that policymakers shouldn't lower their guard, telling reporters we did not discuss rate cuts at all. The Bank of England also delivered a hawkish pause, pointing to several upside risks to inflation. The Bank of England still has a long way in reining in inflation, and that explains why the pound was the best performer yesterday, followed closely by the euro and the yen. However, there's been a bit of a pullback today for the euro following a very poor batch of flash PMI readings out of the eurozone. The UK economy, on the other hand, seems to be faring notably better, with economic activity picking up in December. The latest data highlights how central banks have become at odds about the way forward on rates. Only yesterday, U.S. retail sales and jobless claims beat expectations. Yet the Fed seems to be sending a clear signal that rate cuts are on the way, while the ECB wants to keep rates on hold for an extended duration despite a sluggish economy. Investors have not altered their view that the European Central Bank will begin slashing rates in April, whereas for the Fed there is greater certainty that the first cut will come in March rather than May. Investors have also upped their bets for Bank of England rate cuts, but in the short term at least, the pound's bullish streak is likely to continue. The yen is another currency that could extend its gains should the Bank of Japan offer clues about the possible timing of liftoff when it meets on Tuesday. For equity traders, though, the sharp slide in yields has turbocharged the end-of-year rally. The Dow Jones closed at another record high, while the S&P 500 and Nasdaq set new 2023 highs as tech behemoth Apple saw its share price hit an all-time high. This was today's market comment here at xm.com. Have a great weekend.